Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bearish scenario on the 4-hour chart where we're looking for either a finished 5-wave impulsive structure or a finished ABC, but in both cases we are looking for a move towards the downside. More locally, from this high, we are then looking for a diagonal to the downside in a wave A or 1, which either is already finished or we can expect one more low because we can count it as a 1, 2, 3, 4, 5 and then a correction to the upside in a 2 or B, or we can count all of the wave zigzag structures in a wave 1, 2, 3, 4 and eventually a wave 5. After that, at least we want to see a 3-wave corrective structure to the upside. Common target area for a wave B is between the 382 and the 886, 51.4k to 52.7k. Common target area for a wave 2 is between the 05 and the 786, 51.7k to 52.5k. What is important in this scenario is the key level, in other words, this high over here. If price moves towards the upside and takes this high, then the diagonal has to be finished and this has to be the low. If price makes one more low and then moves towards the upside and takes this high, then this low over here has to be the low. So this high is actually quite important. If price takes this high and therefore the diagonal should be finished and later price moves down once again to take this low, probabilities are very high we're going to get continuation in either an A, B, C to the downside or an impulse in a wave 1, 2 and a wave 3. If price makes a new low before taking this high, it is no problem and we can just label the new low a wave 1 or a wave A, then look for a 2 or B and then continuation to the downside as you still expect this low to be taken. The invalidation for this scenario is price taking the high over here at 53k. In the bullish scenario, we are looking for an unfinished impulse, right? We are looking for a wave 1, 2, 3, 4, and we still want to see one more wave 5 to the upside. So one more impulsive move. The common target area for a wave 4 is between the 236 and the 05, which is between 50.4k and 47.4k. Less common target is between the 146 and the 236, 51.4k, 50.3k, and the 0.618 is an invalidation, 46.1k. The fibs are taken from the low of 2 to the high of 3. The issue with this scenario at the moment and what lowers the probabilities more and more is time. You can see the fib times on the chart taken from the high of 1 to the low of 2 to the high of this wave 3, comparing 2 in time with wave 4 in time. The rule of alternation states that if wave 2 is short in time, wave 4 has a higher probability of being long in time. However, when we compare a wave 2 and a wave 4, it still needs the right context, and if we look from a fib time perspective, by far most commonly a wave 4 is then ending between the 1 and the 4 fib time. The moment a low is made after the 5 fib time, which is the case over here, probabilities start to go down for a wave 4. Now we are ranging after the 6 fib time. If we now make another low over here, again it really lowers the probabilities that this whole range is a wave 4 and it increases the probabilities for the bearish scenario. So time now becomes very, very important, and the longer price is ranging here, and especially if price is making another low, the lower the probabilities for the bullish scenario. Now the micro bullish scenario would be a regular flat structure where we are looking at a 3-wave move, A, B and the wave is C. In this case, wave B retraced to the 1 to the 105 Fibonacci, taken from the high to the low of wave A, which is the common target area for a regular flat. And then we're looking for a diagonal structure in a wave C, where the most common target area for wave C in a regular flat is between the 1 and the 1.236, taken from the high to the low of wave A to the high of wave B, which as you can see is currently being respected. And even if we make one more low, that's absolutely fine. As you can see, we still have room in this target area. But keep in mind, if we make another low over here, we're going to make another low after the 6 fib time, significantly lowering the probabilities for a wave 4. So time-wise, it would actually be better if this is the low over here, which already is made after the 5 fib time, right? It's not an invalidation, it's all a probabilities game, and making a low after the 5 fib time starts to lower probabilities for the bullish scenario. However, we do still have these bullish CVD divergences here on the 1 hour to the 4 hour chart, higher low in price, lower low on the CVD. This would support bullish continuation, but we do want to see bullish CVDs building, of course, locally as well, preferably. Right now we are hitting resistance, as you can see. The daily naked point of control acting as resistance, 51,650. Above the daily naked point of control, we have the blue box over here at 52.2k to 52.4k. And then we have the monthly as well as the weekly gap top, 53.3k. So we haven't yet filled the monthly gap as well as the weekly gap, which is something that is common after you close candles, especially higher time frame candles inside the gap. Then we move towards 56.8k to 57.3k for the next area of resistance. I also like to highlight that on the Bybit chart, the value area high of the volume profile of the big range in 2021 is at 54.8k, which is a very important resistance as well if we're looking for a wave of 5 towards the upside. So if you then look at the probabilities of the different scenarios, then on the 4 hour, currently as it stands, probabilities are neutral, maybe slightly bullish just because of the bullish CVDs that we have. But what I look for is more confirmation locally from an Elliott Wave point of view. So if we look for bullish continuation, we want to take the key level high, this high over here, sitting at 52.1k, and then not see this low taken again, right? We first want to take the highs, and then at a later stage, price can easily take the low, that's no problem. But if we take this high over here, we don't want to see price going down before taking this high over here, right? If price can hit the 886 Fibonacci taken from the high to the current low that we have, or if price makes a new low from the high to the new low, that also increases probabilities to then take this high over here, right, for bullish continuation for then a wave 5 to higher prices. The bullish CVD divergences would then be in line with that scenario where we're looking for a wave 5, right? If price creates a new low over here after taking the key level, so price moving up, taking the key level and then making a new low, we expect continuation in a wave C or a wave 3 to lower prices. Preferably, I then like to see also some local bearish CVD divergences, a lower high on price, higher high on the CVD. Making a new low before hitting this key level here at 52.1k, this high, also increases the probabilities for bearishness just because this wave 4 is then starting to be very long, which is not really what you want to see. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.